What deal sizes does private equity invest in? Have you ever wondered what size deals private equity firms actually invest in? Well, it's not just billion-dollar buyouts. There's a wide variety of targets depending on the firm. So let's break it down. What is the deal size that private equity invests in? Deal sizes refer to the total transactional value. That includes the price paid plus any debt or equity used to close the deal. It's one of the biggest factors that determines which private equity firms are even interested in a deal. Three main tiers of deal sizes. Private equity typically breaks it down into three tiers. Lower middle market, anywhere from $5 million to $50 million, and maybe down to $2 or $3 million at the bare minimum. Middle market, $50 million to $500 million. Upper market, $500 million and up. Mega deals can get into the billions, but that's quite rare. So who plays where? Lower middle market firms target founder-led businesses and real estate operators. Middle market firms are often building platforms with add-ons. Upper market and mega firms, they're looking for IPO-ready companies, corporate carve-outs, and institutional deals. So what about real estate private equity? Well, in real estate, private equity deal sizes vary by strategy. When you're starting out, partnerships, also known as syndications, might be as small as $1 million to $10 million in total deal size. Small funds range from $10 to $50 million in equity raised. Institutional joint ventures often exceed $100 million capital raises. For example, I've opened 5 funds, and they've ranged anywhere from $15 million up to $25 million, where that capital was used to buy mobile home communities and self-storage facilities as the preferred category of asset for that capital to be deployed in the fund. So why does deal size matter? Private equity funds need to deploy capital efficiently. Larger funds need larger deals, or they can't put the money to work fast enough. Smaller firms can target overlooked assets with higher upside, but they have less room for error. So if you're raising capital or selling a business, you need to know where the deal fits. If you're raising $2 million, you don't want to pitch a $5 million fund. So you want to find the firm that matches your scale, your industry, and your timing. One thing I've learned in this industry is the smaller deals between $1 and $10 million have higher upside, but they can be hands-on. They're highly operationally intense. So that took a large firm where I now have 100 employees to be able to manage all the assets because of the effort and energy needed to drive the value from those assets. Also, smaller assets under $3 to $4 million can be quite competitive, but that $3 to $10 million range has some opportunity because it's too big for the small investor, but it's too small for the larger institutional investor. The target deal size is $3 million up to $10 million per asset that I'm buying in the fund. A small fund typically raises $10 to $25 million. Mid-size real estate private equity funds raise anywhere between $25 and $100 million. And then larger real estate funds raise hundreds of million dollars, if not over $1 billion. These larger funds are the Blackstones or even public REITs that are traded on the stock market. So private equity isn't one size fits all. From sub $10 million deals to multi-billion dollar takeovers, there's a firm and a strategy for almost every deal size. The key is knowing where you fit in with your investment and who's looking for exactly what you have. Do you want to compare private equity firms for your investing? Well, download my free tool, the Private Equity Investing Map. It includes tier breakdowns, capital sources, and different categories of investments that you can make with confidence. And if you're wondering how to structure your own deal, or you are attracted to private equity as a passive investor, check out this next video about building your private equity portfolio. I'll see you on there.